All right, guys, Alec back with another stock market and investing video. Today, we're going to be talking about a few undervalued stocks. It's always good to find some undervalued stocks in the market because right now it's almost impossible to find undervalued stocks. Just how much of a bull market we were in for so long. Stocks just kept running up and up. We never thought we can see anything go down. So it's hard to find undervalued stocks right now. So that being said, let's get right into it. The first one we're going to be talking about today is going to be Dropbox. This is a good stock that I love talking about all the time on the channel. If we look at the 1 year graph, they IPO'd about a year ago, and they're hovering around right around this mark they're at right now. They IPO'd at $29 a share, which is a 33% gain as well. We can see it have here. I think this is going to be a great one to keep for a long time. So let me show you some reasons why I think it's undervalued and what I like to look at when I'm looking for an undervalued stock and how to find an undervalued stock. So you go to balance sheet, you type in Dropbox balance sheet, go to the Yahoo one, click on it. And when it loads up, you can kind of look at the total assets versus liabilities. That's going to be an important thing to look at. You can look at the income statement. So click on that. If it ever loads here. Get to income statement. What we're going to want to look at is total revenue. And what we're going to want to see is year over year growth. So you'll see that they're only at 800 over here, and they climbed up, keep climbing, 13. Now they're at 16, 17. So you can kind of see their revenue going up and up, which is a good sign for a company that you know that you want to invest in them as well. Next, we can click on statistics right here. And you might have to scroll through this little bar here, but you'll find statistics. Then you always want to look at the forward PE. And you can kind of see Dropbox has always been a 30 forward PE. It was even a 67 forward PE at one point. And right now you see it's at a 21 forward PE, which means that it's really undervalued right now. And I'll put a little screenshot on the... If you guys don't know what a forward PE and PE here is, right here I actually explained it in one of my posts. So if you aren't following my account, make sure you are, because you can kind of see everything. So forward PE is basically looking at the next 12 months of profit compared to where the market cap is at right now. And increasing forward PE quarter over quarter or year over year is showing that it's going overvalued, and a decreasing forward PE year over year, quarter over quarter is showing that the company is getting undervalued, especially if you see the revenue growth going up as well. So that's the first part we talk about this post, is the revenue growth is those are the two most important things when looking at big market cap companies too. So even when we get into looking at Facebook, Google, and all those other guys too, we definitely want to be looking at those two things. So that's the first one, Dropbox. I'm going to be buying a lot of that one right now. That's one of my best stocks right now to get into the market at this current point. So right now the market cap for Dropbox is only at about $8 billion, and about 5 years ago they were evaluated at about $10 billion. So they're extremely undervalued, and they're a big growing company. They're all over the place. They're all over the smartphone. If you go to share something or click share, when you go to click it, the Dropbox image pops up. It gives you an option for Dropbox. So this is why it is actually on the number one spot on my list. All right, the next stock we're going to be talking about today that is extremely undervalued is going to be Nordstrom at $12.29, down 5% today. This stock, it really can't get much better than this. This one's going to be offering a little bit more risk than Dropbox is, because the retail sector, as we all know, is in danger. The retailers are in big trouble. Nobody's buying anything right now. But as soon as Christmas comes and the new year, 2021 comes, and they start opening stuff up, I think it's going to be really good for Nordstrom. They're one of the better ones too. Wall Street keeps grouping them in with JCPenney and Macy's and Marshalls and TJ Maxx, when if you go to their website, they're actually catered toward more of a high-end ticket. They sell around $90 spandex and $40 makeup sets too. So they're definitely more towards the luxury side of things. A lot of people, when they think of Nordstrom's, also think of Nordstrom Rack, which is the cheaper version of Nordstrom. It's their discount store, but remember, it started off as Nordstrom, and it is pretty high end. All right, so if we pull up Nordstrom here, go to statistics again on this little bar on Yahoo Finance. Let's look at the forward PE. They have about a 10 right now, guys. Forward PE 10. That's super attractive. They also have a price to sales of 0.19, which is really good as well. So these are some good reasons why we see an undervalued market. We see an undervalued stock. Wall Street just really isn't getting that Nordstrom is more of a luxury brand, and they're not really shouldn't be classified with like JCPenney, who just announced that they're going bankrupt. So I will say that they do have a little bit more risk than Dropbox, but they have a huge upside of about about a 70% and 80% gain. If we give it a year, 2 years, and retail bounces back, and we actually see that people are buying more, going out more, restrictions are being let up. We can go to concerts again, sporting events. People actually want to go out and do things. Nordstrom's going to be a great indicator for that as well. So I'm excited to see where Nordstrom is going to be going. Department stores, this has no time for grave dancing heard on the street. JCPenney. You can actually even go to and read this if you want to pause it and see what the bulls say. Nordstrom is overcoming weaknesses. Nordstrom's generational investment plans is finishing. Nordstrom's 2020 results are taking a big hit from COVID, but its brand's power should hold. As you see people say, fair value with $33. I'd love to see it at $33. So that wraps up Nordstrom, and I'm bullish on this one. I'm definitely going to be buying Nordstrom right now as well. And I want to do one quick honorable mention here. Big tech in general is really overvalued. We're going to see it take a nice, percent off. We already see it already down 4%. Apple's down 4%. Google's down 3% as well. So we'll see about another 10% hit or so. But what we'll see here is Google, I think, is one of the better ones to look at in big tech right now. Even pre-corona, when it was doing just fine, was at 1,400, and right now it's below that as well. So I think Google looks pretty good as a PE ratio of 31, but I think we're going to see it going down a little bit more. You see analysts all say buy. Fair valuation 1,700. So I say long term, it's a safe bet to go ahead and buy this one. Because if we look at Apple, it's really overvalued in my opinion. It's going to be going down to like $90. Google, I can't really see this one going back down to 1,200 again. That's just kind of unrealistic for me. So I think this is a safe time to be buying Google stock. 1,400 a share is pretty fair, honestly, especially if you're holding for long term. This is not on the list. This is going to be just an honorable mention, though, because in general, tech is very overvalued, and this one could still sell off 10% more for all we know. Apple can let's look at like Apple. Apple could definitely sell off another 10%. They're down about 5% today, and pre-corona they were at $80. So Google's already at the pre-corona's highs. They're at that 1,400. Apple should be around $80 right now. So guys, that wraps up the video. I hope you did like it. It's just a quick one today to go ahead and let you know some undervalued stocks in the market right now, what stocks I'm looking at, what stocks I'm looking at buying. I hope that big tech goes down another 10% because I'd love to stuff some money in Apple at about $80 a share, stuff some money in Facebook, stuff some money in Tesla if it goes down another 30%. I would love to buy Tesla. Let's look at that one real quick too. I'd love to buy Tesla at about 250, honestly. I could drop another $100, even below 200. I'm sure that's fine as well. So let's just set our price targets on Tesla for about 250. Set our price targets on Apple around $80 to $90, and let's set our price targets on Google for around $1,200 to $1,400. Those are awesome price to be buying in at. Hope this video helped you guys out. Remember to like it, share it with a friend if you liked it, comment, and go ahead and shoot me a DM if you want to see some more videos. Show me some love, guys. We have been getting some more likes lately, so I'm happy about that. A lot of views as well. So, all right, until next time, guys, remember, don't time the market, buy the market. Peace.